Hello and a good morning from New York, a good afternoon from Brussels. My name is Bart van Ark and I'm Chief Economist at the Conference Board, and welcome to our webcast on our Global Consumer Confidence Index. We just released this morning our second quarter Consumer Confidence Index for 2019. We produced that in collaboration with Nielsen, and one of our panelists today is representing Nielsen. It's a great index which really checks consumer confidence in 64 countries around the world, and overall about 32,000 households that have been surveyed through the internet. So it's a lot of material in here, a lot to cover in this webcast, so we'll try to keep it at a very high level, but please go to our website conferenceboard.org in case you want to download all the detail which has been posted there just this morning. In this webcast, we are going to address a couple of the key issues of the index today. First of all, we're going to just look at a very high level at some of the global and regional results for the second quarter of 2019. We'll look a little bit at the changes over time compared to the previous quarter. We'll look at some of the differences between the major regions in the global economy. We talk a little bit what it means for the economy. And then in the second half of this webcast, we're going to take a little bit more of a deep dive and really look at consumer sentiment and consumer ideas. So we're going to look at how do they think about their job prospects, how do they think about their personal finance situation, especially how do they think about the spending intentions. Those are the three things that are underlying the Consumer Confidence Index. But we'll also spend a little bit of time on what sort of concerns consumers have. We ask questions about that. And of course, at the end of the day, what does this all mean for consumer expenditure? So lots of things to talk about. Just want to make sure that you can ask us questions during this webcast, and please do so. There's a lot to talk about. There is a chat box. Put in your questions anytime during the webcast, and we will pick them up and try to weave them into the conversation a little later. Also, a few other guidelines to get the maximum use of this webcast in addition to asking questions. There are some slides, as you can see, that we will present. You can download them, you can look at them later, you can share them with your colleagues in your organization. If you want to look at the slides full screen, then please click on the four arrows at the top right of your screen, and you can click again, and then you go back to the video feed also. And at the end of the webcast, there's a brief evaluation, and we always like to hear from you. So please take 1 minute to just fill that out. That'd be very helpful. Also, some of you will be attending and are eligible for CPE credits. If that's the case, please make sure that when there is a box popping up, that you type in your full name and address, that you click OK for those free pop-ups during the program. Stay on for the entire webcast, and of course, those credits are only available if you are attending live. Okay, so with all that, let's go straight to introducing our panel. And today I'm going to introduce the panel, but at the same time ask each panelist very briefly the same question. So I'd like to answer you to that question. Why is consumer confidence an important metric? And I'm going to start here in the studio with my colleague Denise Daalhoff. She's the senior researcher on consumer dynamics and marketing here at the Conference Board. Denise, welcome, and thanks for joining us again today. And what's your answer to that question?
Thanks so much for having me. So I think consumer confidence is important because it indicates business potential for companies, and it can even give indication for marketers how to market their whatever they offer, their goods or services, like what they offer at what prices and so forth.
That's a great answer. So you see if our other panelists can get over that. So on the right, on your left, is John Forsyth. John is our institute leader of our Consumer Dynamics Institute at the Conference Board. So this Consumer Confidence Index is fitting right in the middle of that. John, welcome. And what's your answer to the importance of consumer confidence?
Great, Barton. Thanks for having me. And I'm going to build on what Denise said, not try to overcome it, right? I think, I talk to senior executives, particularly at multinational companies. They're trying to get a hold of, as they operate in many, many countries, how do they understand where to invest, where to pull back? Is Brazil going to be a problem this year? Is Japan going to be a problem this year? And I think the confidence index, particularly because we have results in 64 countries trended over time, is a great metric for them to look at to get a handle on how their portfolio is doing and where there may be some areas of growth, and where there may be an opportunity, and where there may be some areas where they need to cut back.
Great, thank you. Well, this is a global index, so of course we go beyond New York and we go to Brussels, where our colleague Ilaria Sally, our senior economist for Europe, is based. And Ilaria, welcome again. Of course, what is your answer? Why is consumer confidence such an important metric?
Hi Bart, and hello everybody. I'm taking more economic perspective and cycle perspective. We know that the global economy is going through a slowdown, and there is a lot of uncertainties around trade. So I think it's extremely important right now to look at what consumers are thinking, because it's up to them to sustain the economy in the coming quarters.
Right, thank you. Great. And we stay in Europe, Regan Liggett. As I said, we are doing this Consumer Confidence Index in collaboration with Nielsen. And Regan is the Executive Director, Thought Leadership and Foresight at Nielsen, based in the Czech Republic. Welcome, Regan, and your view on why consumer confidence is so important for you customers at Nielsen.
Thanks for having me, Bart, and great observations by the panel. I would agree that when we're trying to identify emerging opportunities, this is a great indicator to help allocate where investments should go to for multinational corporations who do struggle to make sure they are allocating resource in markets that are buoyant and where consumers are spending.
Great, thank you. Well, we'll pick up some of those topics from your answers. Surely, it has big implications where the consumers are and where confident consumers are. That's where you want to have your business. But at the same time, Ilaria alluded to that there are some short-term challenges, and consumer sentiment has some short-term issues also that may not necessarily change your investment decision, but certainly awareness of what your potential is for sales and growth in a particular region in the short term. So both will come back, and actually in the first section we're going to talk a little bit more about this issue of what does consumer confidence in the short term mean and how do we read those numbers. But before that, Denise, let me ask you to very briefly give a quick introduction for those in the audience who are not familiar with the index, what the index is about, before we dive in details.
Sure. So this index has actually existed since 2005 when Nielsen started it, and we took it over here at the conference board a couple of years ago. And officially, our official launch was actually last quarter in April. What the index is, it's based on an online survey of 32,000 consumers in 64 countries. We have a sample of 500 people in each of those countries. And the countries are picked based on their penetration of internet users. We need at least 60% or 10 million online users. So our sample, that's important to keep in mind, is representative of the online population, people that use the internet. And the great thing about this survey is actually it's really unique because we use the same methodology in those 64 countries. We measure confidence at the very same point in time. So it's really comparable across countries. And we have, as John already alluded to, we have a time series since 2005. In addition to tracking confidence, though, we have additional questions that we ask. And they relate to what kinds of product and service categories do consumers spend their money on after covering basic necessities, as well as what categories have they started to save on if they want to save money. In addition to other questions such as any kinds of concerns, from economic concerns, political concerns, personal concerns. So it really is like, we're taking the pulse of the consumer in a range of topics, from, the economy to the political environment to personal issues.
Great, thank you. That's a really good and succinct introduction into the index. A lot more to talk about, and some of it may probably come back later in the webcast. I actually want to start today on on some additional questions. There's one question that we actually also like to try out on you as an audience. It's a poll question that is in the survey that we're asking consumers about what are their biggest concerns. And I've divided this up into this first poll question, which focuses on some of the more economic and political issues. So if you can show up that poll question, the question is, which do you believe to be consumers' biggest concerns with regard to current economic and political issues? Here's a choice of 6 possibilities. What do you think consumers' biggest concerns today are when it comes to some of the economic and political issues? Later on we'll talk about personal and social issues, but this is more economic and political issues. So please pick a few, take some time to think this over. Then I, of course, will show you the results for the survey, and I'll ask each of the panelists to give a brief comment on that. So let's give it 5 more seconds. 5, 4, 3, 2, and we'll stop it now. So there's a pretty clear majority of the audience here who believes that political stability is actually the thing that consumers are concerned about most. 47%, 19% of you think debt is a big issue, and about 14% of you think that job security is one of the bigger issues. So out of those 6, political stability really comes out as the most clear one that is coming up. Now let's look at the results that we got out of the survey. Those are the global results, but we also broke them down in the results that we got from consumers in North America, Asia Pacific, Europe, and we broke down the Europe into the Euro area also, so smaller sample, and then Latin America and Africa and the Middle East. So you can see that consumers actually think a little bit different. Actually, political stability, only 5% of consumers globally picked it as the most important, slightly more in North America, 8%, but still by far the biggest is the economy. 16% of consumers picked that as the most important one in Asia Pacific, 18%, in Latin America even 20%. Job security, 12%, so that is important, a little higher in Africa and Middle East at 19%. Political stability is somewhat lower on the list. And debt, it was actually picked up by quite a few of you as important. Quite a few of our attendants today are from North America. It's correct that in North America it's a bigger concern than it is in other parts of the world. So I'm not going to go to my audience. I'm going to start with Ilaria. Ilaria, any sort of thoughts about what the audience said and what you're seeing in this slide? Any kind of color you want to add to those results?
Well, first of all, I'm guessing that half of our audience for this webcast lives in the UK, because when I looked at the data, I found out that 1 in 10 people that are residents in the UK considers political instability as a top concern, which is a very high share in a mature economy, and especially in Europe. So that's my first guess. And then one result I'm surprised, not from the poll, but from the actual results of the survey, is utility bills. If you see in Europe and the Euro area, there is quite a number, 7% and 8% in the Euro area of households that are worried about increasing utility bills. And I have to admit, I cannot make sense of it, because if you look at inflation data, the inflation on energy prices has actually been coming down in the latest months. So I leave that as an open issue, because I cannot...
Well, actually, in one of the later slides, we actually see that a lot of that increased utility bills when it comes to the euro area is actually in France, Ilaria. So it may have been related to some concerns that we have with the protests from the Yellow Vest. I'm just guessing this, we don't know. But there is quite a bit of distribution around this. John, you want to follow up on this?
Also, it tends to be, we'll get into this later, but there are, if I look at we get some very detailed questions on where people start to save, and utility bills comes up as the second and third in almost every country. So it is something where when people look to save, they try to cut back on their utility bills. This is especially true, I think, in Germany.
That's a good comment. Now that we're with you, any follow-up on...
Well, that was one of my comments, was going to be that it's because you see the saving here, and because you see the debt in the U.S., the debt in the U.S., again, paying down that as opposed to spending, that small numbers, but high enough to start to say, should we be worrying about this going forward?
Right. Regan, let me go to you. Any kind of observations you're making on what you saw in the poll or in those responses?
Yeah, I find this a fascinating topic and a question, actually, because consumers are saying that the economy is their biggest concern, 18% in Asia Pacific. But when you think about how consumers gauge how the economy is going, it's usually from the media. Seeing a report on the news, some pundit talking about how the economy is travelling. So there seems to be an interesting disconnect there, where consumers would probably feel an economy slowing down by employment rates, job security, etc. So, it is quite a fascinating area.
And it's interesting indeed that in Asia Pacific, where actually the economy, I understand why in Latin America there's a lot of concern about the economy. We'll come back to that a little later when we look at the confidence results. But in in Asia Pacific, where the economy is quite strong, it's actually a little surprising to see this. So it's maybe also be a bit of a relative matter, right? I mean, the economy has been very strong for many years. Maybe there's a little bit more pressure now from trade disputes or other things that people see the growth is not as solid anymore and not as secure anymore as it used to be.
Absolutely, and I think a lot of people have short memories, long memories. So it's not too many years that they'd have to think back to remember what a slowdown, an economic slowdown, actually meant for them in many of these developing markets in Asia. So therefore, it would have a big impact.
Yeah, and which is one of the reasons that what I said earlier also, that even though consumer confidence is a good measure, also from a long-term perspective, a lot of this is short-term. Right, I think we shouldn't read the Asia-Pacific concerns necessarily as the fact that the economy will not be a good market any longer. It may just not be as good as it used to be. So it really is a relative matter. Denise, any thoughts from your side?
Yeah, I thought it was really interesting that our audience actually picked political instability as the main, concern. Which to Ilaria's point, I think Ilaria, or actually Regan made it about media, and I feel like we have been exposed to so many, reports about political instability in various parts of the world that is actually not surprising. However, maybe from a consumer perspective, political instability feels like a little bit removed from your day-to-day. And so seeing economy and job security bubbling to the top, makes sense, because that's sort of the, especially the economy is an umbrella term for, many things. So maybe that's why people pick that as their top concern, to lump it all in one.
Yeah, and actually, and then we're going to move on. What I find interesting about this question, so we don't only ask the biggest concern, we also ask the second biggest concern. And there is a little bit of flipping around. So for example, to Ilaria's earlier point, political stability has become an important concern in the UK now, which is understandable given the recent political developments and the uncertainty, and the economy have moved second, but then in other times the economy comes first and political stability comes second. So the second concern is also an important one, and we don't have the time to go through that, but it is an interesting piece that we also can get out of this survey. Okay, let's move on now and let's talk about the Consumer Confidence Index itself. Again, Denise already mentioned it, are sort of three underlying questions that are really important here that make up the index. That's their respondents' perception of job prospects, respondents' perception of personal finances over the next 12 months, and their perception of whether or not this is a good time to spend. We'll come back to each of those three a little later in the webcast, but those are the three that are underlying this. People can then say it's bad, it's not so good, it's neutral, it's good, or it's excellent. We weight all that together, and that will give us this index. Now, what we're showing here on the left-hand side is a typical heat map. This is looking at the level of consumer confidence. In quarter two, the countries or the regions that are red colored are typically the regions that have confidence levels higher than 100. That means that you have more positive consumers than negative consumers, more consumers who say conditions are good or excellent for those three questions than that they are bad or not so good. The blue ones, the more dark blue it is, the more cooler, the more pessimistic consumers are. And on the right-hand side, you can see some of the underlying numbers. So a little bit of an uptick in the overall index from 106 to 107. That frankly statistically isn't incredibly significant. The most important thing is that consumers are holding up in terms of globally being pretty solid in terms of their confidence. There's quite a bit of difference between regions. We find a fairly good pickup in Europe, but Europe has more pessimistic consumers, but they have improved on it by 4 points. That's a big improvement. Whereas on the other end of the scale, if you go to Latin America, there's actually been a significant decline in consumer confidence of 4 points. Most of the other regions are staying pretty neutral. The euro area is going up by 2 points, so that's a pretty good improvement also. But then Asia, Pacific, Africa, Middle East, and North America stay relatively stable. Now there are 64 countries. We obviously can't go through all 64 of those. But let's just pick up a few things, and there are a few more slides, and I invite my panelists to refer to any sort of piece of content that I want to share. Denise, let me start with you. Any insights at the country level, at the regional level that you think are really worth highlighting?
Sure. So since I have a little bit of a bias to Germany, I'm from there, so let me comment on Germany. we actually see here on this heat map that Germany is still like orange, meaning they are like in optimistic territory. However, when you look back the last few quarters, we have seen a very, very slight but consistent decline in consumer confidence in Germany. And of course, Germany is one of the big European economies, so everybody looks to it and is interested in what's going on. And I would think, thinking of the reasons why this happened, there are probably internal and external reasons. The internal ones are the grand coalition between the Social Democrats and the Conservative Party is a little bit in a crisis. Businesses are not that happy always with what the government is doing. And then also externally, there has been uncertainty obviously around the Brexit, but also with the EU talks with the US. Germany being a big exporter, of course, that's a big thing. Thinking of all this going on in Germany, it's actually it's actually great news that Europe in general has increased, but that also means, that other countries have actually increased the more to achieve like this overall improvement in Europe.
Yeah, and indeed, let me show you the next slide too. This next slide is another heat map, but now we're looking at the change. So the previous one was looking at the levels. This is looking at the change compared to the previous quarter. So now the red ones are the ones that are seeing a decline. The green ones are the ones that are still seeing an increase. This is interesting because even though the overall index has improved, it turns out that only 28 out of the 64 markets have improved. And that was actually 33 in the previous quarter. So the amount of countries, the balancing, if you like, between countries that improve and countries that do not improve has actually changed a little bit, disadvantages. But to your point on Germany, so here you can see that Germany lost 4 points just in the last quarter, and over a year Germany actually lost 7 points. So so Germany really is showing a significant slowdown. And Elijah, let me go to you and pick up on this point and follow up whatever else you want to talk about, because Germany is the largest economy in Europe. So is this going to create any problems from an economic growth point of view in Europe?
I think we have to monitor that very closely, because we are in the very unfortunate situation where both the consumer confidence is going down and the business confidence is going down. And we know at the same time that the long-term doesn't look any better, because there is a strong demographic effect of aging that is there to affect growth. So I think it's good to be concerned with. It's good to keep an eye on what happens in Germany, because indeed, being the biggest country of the Eurozone, can drag the entire Eurozone down. Now, to go to more positive news, I will switch to France. In France, we have seen a big pickup in consumer confidence in the last 2 quarters, and even though households are concerned by the increase in food and utility bills, as we said before, they still think that it's a good time to spend. I think out of the 3 sub-indicators, that's the one that is affecting strongly the increase in consumer confidence in France. There is another country where we can talk about some good news, and that's Italy. It's good to have an increase in consumer confidence in Italy, because the country is trying to come out of a recession. Growth was negative at the end of 2018 and the beginning of 2018. So the fact that consumers are gaining confidence might signal that the economy is trying to get out of the woods. I would never been too optimistic about the outlook for Italy, but it's still an improvement. And then 2 more countries outside the Eurozone I would like to mention is the UK and Turkey. In the UK, we've seen confidence going down again and again since the Brexit referendum, basically. And it is no surprise that confidence went down this quarter, given the increasing discussion in the country after Theresa May resigned and the increasing chances of a no-deal Brexit. Now, last but not least, Turkey, a very interesting country. I think we always talk about Turkey because the index is extremely volatile, and not only consumer confidence. I mean, many economic indicators for Turkey are very volatile. So there's been a big jump, like really a huge jump in consumer confidence. It went, if I remember well, from 84 to 100 in just from 1 quarter to the other. And I guess this makes it very difficult for businesses to just do business in Turkey, given the volatility.
Yeah, and you can see actually in this slide that on the screen now. I hope you can maybe enlarge it so you can see it. You can indeed see Turkey, which is the 3rd one from below on the right-hand column, picked up by 17 points. This is the biggest increase around the world. It's quite substantive, of course, coming from lower levels, but it's now back at 100. So we have a certain equal amount of positive and more negative consumers. Elaine, I just want to drill a little bit more down on that earlier question that we asked about the biggest concerns, because if you look at the variation between European countries, you do see some differences here. So political instability or concerns about political stability is actually at a high level in UK, to the reasons you explained. Also in Spain, which I think is interesting. Also job security still is a relatively major concern in Spain. And then in Italy, although there is an improvement, you still see that the concerns about the economy are quite substantial. Any comments you want to make on this, on those observations?
Well, I think it really, I mean, these numbers really reflect well the economic situation of the country. In Spain, unemployment went down from 20-something% now around 12%, but there are still 2 million people unemployed. So fair enough that a lot of people are concerned about their jobs. In Italy, as I said, the country tried to come out of a recession, so that is very well reflected in the answers here. And as you said before, yes, the yellow vest protest increased taxation on diesel, affecting utility bills and food prices. That also is a concern in France. So I really think the numbers reflect well the economic situation in each country, which of course changes, and you don't see that in the Eurozone average.
John, any comments from your side on these aggregate country results or regional results?
Yeah, just some overall and just how to think about it. Because if you go back to slide 9, which shows the trend, looking at the overall number is very interesting, but I think the trend is a lot more critical actually to look at. And we know there are cultural differences in how people fill out these surveys, and there's some more pessimistic countries and more optimistic countries, and the trend really gets at, I think, what's really going on here. So I think this is a much more important chart to look at. I thought it was interesting because we go back a quarter and we were thinking about, okay, the overall measure gone down one, is this going to continue? Is this the start of the trend? Is there something else? And it wasn't the start of a downward trend in terms of at least the overall numbers. Now we know that's heavily weighted by US, India, and China. But go back to what Reagan said. You read all the news and the slowing economy and everything, and at least in the tariffs and what have you, and at least in these three countries, the consumers have kind of shrugged that off at this point and basically said, no, they're still confident in what's going on here.
Yeah, and I think that is a critical point, right? And that is that, we have all these concerns. Ilaria addressed some of them for Europe, but frankly, it's global, about trade disputes and geopolitical imbalances and so on. But, even though we are a little bit concerned about consumers getting worried about it, for example, in the US, where we have a more monthly consumer confidence index, also completely separate from this, but we have the latest reading for June, and we actually seen a significant decline in consumer confidence in the United States in June, and that we do think has very related to the fact that consumers think about how long can this go on with all these trade disputes and everything else. So they're shutting it off for the time being.
Right? Yeah, that our fieldwork ended in May.
Yeah.
So that's an additional context and piece of data.
Absolutely, yeah. This is second quarter results, but the survey is largely done in May. And indeed, some of the upheavals with the trade disputes we have seen in June, when President Trump announced that this whole thing with China wouldn't work and that he might add tariffs to it, that's now shelved again. But I think consumers just want to, like businesses who have been aware of that much earlier, I think consumers now also want to begin to see these issues to be resolved so that they can feel more confident that this expansion that they are enjoying clearly, that is going to continue. So, Regan, let me go to you. We didn't talk much about emerging markets, which is now more than 50% of the global economy. Any insights from any of the emerging markets, whether it's in Asia or other parts of the world, you want to highlight here?
I guess it depends how you define emerging. I probably would want to add a point to India and China, the two most populated countries on Earth, where over a quarter of the world's population right now. India has increased the CCI index. China has leveled off, and it is in this consumer context where their wages keep increasing, infrastructure keeps improving, accessibility to technology and consumer goods keeps improving, along with headline after headline of growing importance on the world stage. It is really going to be quite hard to put a dent in their confidence. But one of the interesting observations I had from CCI was Thailand. who, over the last probably 6 months have been in the midst of political uncertainty. And in the current backdrop of some of the protests in Hong Kong, I find that really significant. Of what we're seeing in some of the emerging markets, especially in Southeast Asia, Vietnam, is that with growing adoption of consumerism and capitalism, we're often confronted with this friction or this tension between the political systems that are not always focused on the individual. And I think that's a really interesting aspect of emerging markets that we may see play out some more moving forward.
Yeah, that's it's clear that the despite the economic concerns that we observed earlier, also in that part of the world, but still, Asian consumers are very optimistic. All of them, most of them are well ahead of 100. Or some countries are exceptions. I mean, South Korea is actually one of the biggest exceptions. They tend to be at a much lower level, but saw a big improvement too. From very low levels, but it's an important improvement. Latin America, however, as I mentioned earlier, is a somewhat bigger concern. Regan, I don't know if you want to talk a little bit about it, but that's a pretty big adjustment in one quarter. It seems that all of these economies really have some problems to deal with. Any comment that you want to give on these Latin American economies?
Yeah, well, it seems to be systemic, doesn't it? There seems to be, if we look over the last 5 or 6 years, there's a process of new political systems or new political agendas coming up, spiking consumer confidence, and then after a period, there seems to be some failure or a lack of confidence, which has knock-on effects into everything from consumers indicating whether it's a good time to buy or not. So we continue to see these issues evolve, and it will be again quite interesting to see how economic policies that are being introduced may come to fruition.
Exactly. But I think the overall picture here is important, right? So we do see this overall stabilization of the global consumer, but as I said earlier, only 28 of the 64 markets are really showing an improvement. Some are showing a significant leveling off or decline. So it is a mixed picture. The consumer is pulling us through, but it's not as solid a picture as it shows at a very high level. And I think from that point of view, Denise, it's really now useful to sort of switch to the second part of our conversation today, and that is to really talk a little bit about the underlying questions that we're asking: job prospects, personal finances, and spending intention. Because we need to dig a little deeper about, where do we see consumers still being okay, and where do we see them somewhat weaker. And this chart, in a nice way, summarizes, at least at a global level, how these three questions are playing out. And then again, I'll ask our panel to take a little bit of a deep dive on some of the individual regions or countries.
So yeah, peeling back, the overall index, we have 3 components, as Bart already mentioned. The 3 are job prospects, personal finances, and spending intentions. Typically what we see is that personal finances have the most optimistic value, which is here in the middle. 63% of consumers are optimistic. The second that we typically see is job prospect with 58%. And the third is spending intentions. What you see here in that chart is that there hasn't been much movement overall globally on job prospects and personal finances. However, on spending intentions, we see like a little bit of an uptick. So let's go through each of these. Looking at job prospects, generally we see that there's a lot of strength. There we do see, to the point about Latin America, we do see some weakness there. Consumers there don't feel as positive about job prospects, as well as in the Middle East and Africa. On personal finances, whoops, this just jumped. Sorry, let's go back. Personal finances, we see an increase actually everywhere except for Latin America, again reflecting that weakness in the region. And then on spending intention, we really see very bullish consumers in Asia Pacific as well as in North America, which, to my earlier point, this gives really good indications for businesses, where are there opportunities, even input for marketing strategies, that's a really important component, because it's very close to, how people feel about spending, not just evaluating the economy in their country.
Right. And again, we'll talk a little bit about variations between countries, but of course the linkages are interesting here, right? So people feel good about job prospects, 58% say this is excellent or good. People feel even better about personal finances, and that of course has been having a positive effect on spending intentions, and frankly everywhere in the world, as we'll see in a minute, with the exception of Latin America again, but everywhere else in the world, at least at a regional level, spending intentions are up. But those are intentions, right? It doesn't necessarily mean that people will spend, right? Can you comment a little bit more on that?
Exactly. So, that's always, it's not the, what people say, intentions also might reflect the conditions in the country. It could even be that it's a reflection of good pricing policies right now for consumers, meaning businesses might be discounting, which of course doesn't bode well for businesses' profits. But from a consumer perspective, that might drive up spending intentions, so they think it's a good time to spend. However, I would add it's really important to have something appealing to sell that consumers actually take advantage of the good conditions.
Exactly. John, can you follow up on that? Because I think that's an important point. How do companies, how do retailers or people in the consumer market try to make sure that the intentions are going to be translated into real action? What do you do?
Yeah, well, what you do is you monitor both, right? And then you look for trends in the underlying data, right? Because you can look at trends in the intention. Are they willing to buy? You can see whether they're actually buying. Some sophisticated retailers even track, what percent of folks are coming into our stores. Reagan, I'm sure Nielsen has great data on this, on looking at how much are they spending. They could be still shopping at the same store, but spending less. Or maybe they're now shopping at lower price stores. Maybe they're going to dollar stores like here in the US to try to get a better value. They still may be buying the goods and services, but they're looking for better value.
Regan, let me go. Yes, please, go
to,
ahead. I was just going to go to you.
Yeah, just to add that, there is a great deal of sophistication about how retailers do approach this. And we have noticed very recently that there is a growing gap between people who are willing to spend a premium on certain products and then only pay the basic on other products as well. So, retailers are getting very sophisticated in luring, consumers into their environment with low price in certain categories, and then compelling them with premium offerings on things that mean a little bit more to them in terms of things like treats like chocolate or beauty products. Being able to expand that basket size, as John was alluding to, is something that is a real pinnacle or a real goal for a lot of retailers in many markets.
Right. Go ahead,
just to add one more to that, and
yeah.
of course, more and more, when this is an online sample, more and more consumers are buying things online, and traditionally that's what they've looked for: better value, better prices, better convenience in what they can purchase online, and that trend continues.
Yeah. Do you get any more comments on this? Let me put up this slide also. This is basically taking a breakdown in these job prospects and personal finances and time to spend by major region. I put out the US and China at top, and then Euro area and Latin America at the bottom part of this slide. The red parts is where people think things are getting not so good or bad, whereas the gray part means improvement. So there is some variation across regions. Some things that you want to pick up here that you think are interesting to address?
Yeah, I guess looking at some of the market data, and especially in Asia, it corresponds very well when you look at the responses to the question, consumers think it's a good time to spend, and overall CCI. You look at India, which has increased, Indonesia that has increased, China, which is fairly stable, and that corresponds very well to their intentions to spend. So, being able to, if you're wanting to, as a retailer or a product provider, is that the good time to take that price rise that you've been thinking about or delaying for some time? There are a number of decisions that looking at this can really inform and help you make a smarter, better decision.
Yeah. Ilaria, again, some regional differences here. Actually, in the Euro area, we talked about that earlier. There is an improvement. We do actually see, a little bit of an improvement in some areas, notably sort of spending intentions and so on. But any comments that you want to add on some of these subcategories?
Yes, I would like to expand a little bit on the Euro area because coming back to your questions, like there are the intentions and then there is the actual spending. Given the fact that the purchasing power of households has been increasing in the last month, I would be quite confident that the intentions are translated in actual purchase. Because what happened is that wage growth went up in the Euro area by 2.5% nominal in Q1, and at the same time, inflation remains very, very low. We are in the range of 1.2, so there has been an actual gain in the purchase power of households. Then at the same time, if you look at the sub-question on job prospects, that also improved, and this is very much in line of with what's happening in the labor market, where there's been, again, job creation and where the unemployment rate touched, again, another record low this month with 7.5%. It was not as low since 10 years, basically. So the overall economic situation, looking at the consumer side, is actually looking very good.
Yeah, and I want to just address here the US-China difference, because obviously these two countries are in the news a lot, and there's a lot of concern about whether these trade disputes are impacting the consumer. And frankly, for both countries, we don't really see that. I mean, both countries are actually pretty stable. That have a lot more consumers who are positive about job prospects and personal finances and time to spend. And in contrast, in the Euro area, which, as I mentioned earlier, generally has lower levels, but also might in a way be impacted as much by some of these trade disputes, because quite a few of these European countries are very exposed to China or to the United States and can suffer from those. So again, to our earlier discussion, so far consumers seem to have to be shrugging this off. But the question is whether that can continue, and if we don't get to a quicker resolution to some of these issues. So I think that.
Yeah.
But on this, I have the feeling that the external and internal part of the economy are really decoupling, because the external part is clearly affected by the trade disputes in every part of the world. Consumer confidence, business confidence is going down. The global industrial production is going down. So the entire global manufacturing sector is, of course, very concerned. But at the same time, at the end of the day, what consumers care is what starts affecting the consumers is the jobs. And we see that in the US, unemployment is as low as ever, basically. It's decreasing rapidly in the Euro area, again, touching new lows every month. And so I guess that's what matters for the consumers before the trade disputes. And probably in China and in the US, where there are indeed the tariffs, this will only affect consumers if the tariffs are translated into higher price, which I'm not sure is the case yet.
Yeah, and to build on that, you actually can see this in the data. I looked at some of the countries where the overall index was going down. We talked about Germany, we talked about the UK, we talked about Japan, And there you actually see is consumers' intention on consumer spending. Is this a good time to buy? Hardly moved at all. What moved is jobs went down, right? Germany, consumer intent to spending hasn't changed at all, yet the overall index is going down.
Right.
So it is, like you say, the consumers are holding it up at this point.
Yeah.
How much longer can that happen? We don't know, but for now, that's what's going on.
That's the big uncertainty. All right, we have a second poll question. It's the same poll question as the earlier one, but now we asked also consumers about their sort of bigger concerns with regard to some personal and social issues. So let's put up that poll question, which really is about, which do you believe the consumers' biggest concerns with regard to current personal and social issues are? And there are 6 here: health, immigration, terrorism, crime, global warming, and work-life balance. So those were some of the questions we asked the consumers. Take your time. Which do you think is the biggest one that consumers would have been putting up right now? And then again, I'll ask my panelists to briefly go into some of those results. So give you a little bit more time about the thinking through this. So let's give it 5 more seconds, sort of 5, 4, 3, you can still change it, 2, 1. Great, it's closed now. So 2 contenders here at the top. One is immigration. The other one is health. Immigration, 42% of you thinking that's actually the biggest concern that consumers currently have. Health, about 32%. The other significantly lower. Global warming, a little bit more than some of the others. So that's again, like we did in the previous case, let's just quickly look at what the responses were. And you are correct, actually, that health was important. People do really care about their health and about health issues. It's pretty evenly spread, slightly higher in Asia Pacific, but also quite high, 10 to 12% in Europe, North America, and Asia Pacific. So certainly in the richer countries, people do care about health. It may have to do something with aging and those kind of things. The second important one, immigration, actually does not come up very high globally. It does come up significantly higher in the US than in other countries. Even the euro area at 6%, still high, but not as high as in the US. Obviously, a lot of this stuff in the news and in the media. This comment was made earlier. Consumers do respond very much about what the media flow is going to be. None of you picked work-life balance as being very important, but in Asia Pacific, actually 12% of consumers do care about work-life balance. It's a great economy, but it's also incredibly hard work, and people do worry about it. So let's go to my panelists. Any sort of interesting insights that we can take from this? Ilaria, let me start with you here. Anything that you want to pick up that's important to observe here?
Well, first of all, let me say that I love this question because you can draw a lot of interesting conclusions if you compare the countries. Now, looking at the euro area, I want to pick up on something, and that's global warming, climate change. I think this is something that businesses can no longer ignore, because if you look how the answers to this question change in just a couple of years, it's amazing. It was not a concern almost at all just 3-4 years ago, and now it's growing very rapidly. And even more interesting is the fact that if you compare to other societal issues like terrorism or immigration, global warming in Europe ranks higher than those. So there is no planet B, what can I say?
Right, exactly. No plan B here. Regan, what are your observations here?
I'll pick up on the high response on Asia Pacific for health, because over the last 15-20 years we've seen a bit of a obesity epidemic in some of these emerging markets, where urbanization, more sedentary lifestyles, moving from rural and physical roles to blue collar and white collar roles, and the absolute abundance of sugary drinks and food that have been consumed at a rate of knots has led to a lot of Asians and emerging markets being more concerned with their health. From other research, we've seen that the intentions to lose weight and lead healthier lifestyles is very high. So there are some key drivers of change that we've tracked that we do see, the increasing importance of things like health things like convenience and sustainability, as Ilaria was saying, have actually been tracked in the increasing sales of these products.
Yeah, and it does have major implications, this healthcare concern, for businesses operating that part of the world. But as I said, it's not significantly lower in North America or in Europe. So there's clearly a lot of opportunity here for healthcare businesses, also in the preventative area, not just on the curing area. John, any thoughts from you on these insights?
Yeah, well, one thing I find interesting is there's so many of these, right? And there's so many issues, which is not surprising in some respects, but it's not, one country or even the world focusing on a couple different things, which is interesting because as more consumers, particularly in developed countries, are looking for brands to take on some social issues and social significance, it does show that there is actually a lot of areas where companies can choose from almost in trying to push things. And in particular, too, like in Europe, there's a whole issue of sustainability here in the U.S., I think has taken off in the last couple of years, given what's going on in Washington. And, many companies that we talk to basically know either are doing something or they really do need to do something in this area.
Yeah, that's exactly right. And Denise, we already talked about global warming, we talked about work-life balance, and there are actually some really interesting trends here.
There are actually. If you could move to the next slide. Here we see it. Ilaria has already alluded that there has been a significant trend, and when you see just the last few quarters, like there's an enormous increase, especially the top two lines are the blue one, North America, as well as Asia. And, but it's actually throughout our region, so businesses really can't ignore it anymore. But on the other hand, also, consumers are really receptive now, probably triggered by all the natural disasters we have seen, extreme weather. So people get it, but it's also an opportunity for companies to be heard more. They have done sustainability efforts for a long time, but consumers seem to be more open to it. And just to add, that we recently, in the same survey in Q1, we had a special section where we asked consumers what, things around sustainability. One question was around associations. What means sustainability to you? Is it more ecological dimensions like recycling, the environment, or is it more like, fair wages, fair labor? And what we saw very clearly is actually these two regions, North America and Asia Pacific, they had a very clear understanding of sustainability as an ecological, to have an ecological meaning. So.
Yeah, right. And it's really interesting because in particular the big uptick in North America and Latin America, not necessarily the place that people think consumers are most concerned about, that actually showed the largest increases. And there's more convergence here than probably in any other slide. We're running a little bit out of time, so let's go to the last section because we really want to talk a little bit about spending intentions and which kind of categories do we see these spending intentions in. This is a busy chart, so maybe you can briefly explain, Denise, what we're looking at here, and then I'll ask each of the panel members to make some wrapping up comments on the spending intentions.
Sure, and I think these kinds of analyses and detailed data provides more color to what we see in terms of confidence and where to maybe gauge what's going on like in the next year or so. So here we see like various categories of products and services that consumers say they're spending their money on after they have covered basic necessities. And these are main categories such as, you put your money into savings, you spend it on holidays, new clothes, out-of-home entertainment, which means like, eating out, going to shows, things like that, as well as buying new technology products and investing into home improvements or buying new decoration for your house. What is the most interesting piece is probably the lower part of the chart where you see the quarter-over-quarter changes. And when you look there in the first line, you see, for example, that putting money into savings has actually increased pretty much throughout the world except for in Asia Pacific. When you look at some of these other categories that are clearly discretionary, it's like completely optional, like new clothes or new technology. Just let me highlight maybe new technology. We see that that category has actually dropped pretty much throughout the world, which is significant.
So why is that? I mean, we all love new technology.
and especially in North America and Asia Pacific, which are very high on tech, my guess is those are saturated markets. So in order for people to incentivize to buy something new, you really have to have something innovative and compelling to make people spend.
So there's a lack of innovation in that sector, you would think?
That's my guess, because people are ready to spend. They seem to have the money, they put it more into savings and are not spending it. So I think it would take a compelling innovation and new products and services for consumers to spend in these categories.
Regan, any thoughts from you on this, these spending intentions?
Yeah, certainly having just returned from Asia there, my observation would be that there is the saturation. There are so many new technologies. There are so many